Yeah, we're good. I can.
Okay, perfect. So we can. Okay, great.
All right,
Hello,
recording.
everybody.
Recording has started.
Cool. Okay. All right. Cool. So I'll just go on and start. So, Gina, this is kind of impromptu. I don't really have an agenda. I just wanted to kind of catch everybody up, see where everybody stands, look at some stocks. Right now we've had such a good run, so I want to kind of look at what's working, and then also kind of be cautious because now we're getting to the highs. And I want to make sure that we are, aware. It can certainly go higher, but we also want to be aware that it's not a bad time to take profits and sometimes switch out. What I've been doing is switching out from stock to options a lot. That way I'm still involved, but my capital is safer. So I just wanted to kind of discuss that. So do we want to discuss any options items? I'm hoping everybody kind of has an idea of the basics.
Has joined the meeting.
Are there any general questions about options first before we look at specific stocks and things that anybody has, or anything that we want to go over? Could be anything, basically. I'm sure hopefully everybody knows at least how to read the stock or option charts and the pricing and all that stuff. And then, we're not just focusing on options now. We're kind of grouping together, discussing stocks, and then, you choose how you want to trade them. You choose if you want to do it with an option, if you want to buy stock. But if there's any option questions out there? None?
Yeah, so this is Ritu. I started learning about options. I haven't done any trade in options yet, and I think I don't feel comfortable enough to do any kind of options trading yet. So I know you guys sent me some tasty trade videos, and that's what I looked at. And I just want to start very basic and then learn as I go. So if you can just give me some kind of overview to what to look at, and then that'll be helpful.
Okay. Sure. So do you know how to read an options chain? And don't feel bad if you don't. I'm just curious. I just want to know where you stand.
Yeah, so I know all these dates and everything, but then on one side is your call, other side is your put, but then what I don't get is those numbers. There are too many numbers, and some are in decimals, and I just don't get what those are.
Okay. All right. So I'll just look at Apple, for example. So let's just look at Apple, which is right now trading around $200. So, on the left side over here is the calls, and then the right side is the puts. So basically, let's just say you wanted to buy an option that was 200 strikes, meaning it's, that's called at the money, basically 200 strikes. So if we were to look at a 200 strike, you've got the call on the left side, and this is your bid and your ask. And basically all the way to the left, I have a column called mark, which is kind of a midpoint of the two. And usually I'll kind of look at that to give me an idea of what the price is. So for example, if I wanted to buy a 200 call, it's about $717, give or take, to buy that option as a call. If I'm bullish on it, I would just simply buy a call and just buy that for $720 if I wanted it for May, for example. And on the flip side, if I wanted to put, I go to the right side, and the mark is around 712. So that's what it would be if I wanted to buy a put. Now, so that's the premium you're paying to basically play the game. That's to basically, in theory, own 100 shares of Apple, and instead of putting in $20,000 if you buy the stock, you're putting in $700 roughly to have, be able to play the game without as much capital. So it's just a nice way to basically participate and not have to put all that capital up. And of course, your loss is also limited to what you pay. When you buy an option, you can only lose what you pay and not more than that. So it's either side, buy a call or a put. And then, like what I was saying, what I'm doing now is I'm kind of, like, for example, I own Apple stock, and today I started selling it at 200 because I'm like, well, good, I've got my target. So I basically sold a lot of my stock That way I lock in my profits and I take out capital and I replace it with some calls and call spreads, so that way I'm still involved with less capital. And if it loses, I lose just that amount, not more than, if anything happens. So basically, reading the option chain is pretty simple. Do you understand that portion of reading the pricing?
Yeah.
Hey, Sandeep, do you wanna
Yes.
quickly go over call spread?
Yeah. So I don't want to confuse you, or maybe I will or won't. But anyway, so what you do is when you buy a call, you can simply buy a call, which is that call for $720 roughly, or what you can reduce, how you reduce your cash outlay is, that's a lot of money. $720 is still a lot of risk. So what you want to offset that is you buy a call and then you sell a call above it, so that way it becomes a call spread. So I could do it like this. I could buy a 200, and it's called a vertical or a call spread. I would buy a vertical. I would buy a 200, and then I'll sell something above. Let's just say I look at the chart of Apple. So this is where you want to look at charts. Let's say right now it's at 200 here, and I kind of look over here. I'm like, well, it struggled around 215 to 220. So my target is from 200 to 215, let's say. So what I would do is I usually buy it at the money, my method. Other people do it differently. Some people buy it in the money where it's more already in the money. And then some people might buy out of the money, but I usually my preference is just buy at the money. So I'm kind of involved at this point. And the reason I don't go in the money so deep is because I'm like, this has already happened. Why am I going to pay extra money out there for something that's already happened? I am only concerned from here and higher. So I just do it at the money. So what in this call spread, I would say is I would buy this 200 for $720 roughly. And let's say I would sell at 215 above it. So basically I would pay 720, and then the 215 is about 200 roughly. So then, and then my debit is $522. So I basically will pay this amount to participate in Apple between 200 to 215. So that's 15 points potentially that are in between there. That's $1,500 in theory, and you subtract what you pay for it, about $500. So in theory, you're spending $500 to make $1,000 profit in theory. And the worst case scenario, Apple is below 200 on May, you'll lose this amount as a maximum. And you have a time limit, of course. That's the negative of options. But then you have the flip side is you have limited risk with less capital. So that is a call spread. And then this is the analyze tab where we would put in to look at how let me see if I can get it.
So you stated that the 512 is the maximum we will lose in a call spread, right?
Yes. Yeah. So that's
522. Okay.
522, and you probably could get it. In the day you'd be able to bid a little lower, but let's just say 520, and yeah, that's the max you can lose. So we're talking buying options, which is what I would suggest for new people. Don't go out selling options until you get an idea of what you're doing. So when you're buying an option, your max risk is what you pay. The debit that you pay is the max that you can lose. So in this case, the call spread was 200, 215. So you could simply have bought the call for 200 for $720 roughly, and then you have unlimited upside. Or you could cut off some of your upside, and thus reducing the amount you pay. Because you generally, you don't need to always buy just a straight out call. You kind of can see, kind of your range of where you might be looking to take a profit, and just buy a call spread. Unless it's a cheap stock or something, then there's no point in buying a call spread if it's just a cheap stock or it's not that much. But for more expensive stocks, I always will buy call spreads. Like for example, Amazon is an expensive stock, so like 1,850 is what it's at right now. If I wanted to buy a long call for let's say for May, it's going to be expensive, which is going to be about $7,500. which is still cheaper than buying the stock for like $185,000. So it's still cheaper. And this is also a little more expensive because it includes an earnings in there. So it's a little more expensive. But anyway, you could participate in Amazon for $7,500, or you could do a call spread. Instead of paying that, you would just buy a vertical and 1850, and let's say you wanted to go to 1900 is kind of your target. Then you would pay about $2,300 for that call spread, or you could pay $7,500 for the call. So it's your option, your desire, your risk tolerance, etc. So that's kind of the gist of a call versus a call spread. It's the same thing on the put side. You can buy a put over here, or you can buy a put spread where you'll buy the put here and you'll sell one under it. You could buy a put spread. So we're talking buying options. It's always a debit, and you don't have to worry about losing more than your capital. And just touching briefly on selling options is the opposite. So back to Apple. When you get too comfortable to it, and then you could sell an option, or I wouldn't sell a naked option. I would sell an option spread or a call spread. So let's just say Apple's at 200, and you think, okay, I don't think it's going to go over 210. I could sell this call over here, 210, for about $315, and I take that in. And when you sell an option, you're on the hook for anything above that price point. So if it goes over 210 plus the 300 you took in, so over 213, you start losing money, and you can lose unlimited because you've sold an option. You're taking the other side of the trade. So that's again selling an option. You do the same thing on the puts. If you're bullish on a stock, let's say I think Apple's going to stay over $200, I could sell the $700 put. But that is, and then the other thing is that's the max you can make is the premium you take in. And when you sell an option, you have limited upside. You can only capture the full premium, but you can't go beyond that. But on the flip side, when you buy an option, you have unlimited upside, but limited downside. So it's kind of the exact opposite. Okay. Any other questions on just the basic reading the option table or basic options? Anything else? Anybody else? Got a good handle on that?
Yep. Thank you.
And yeah, sure. And don't be sometimes you just gotta throw one out. Sometimes that's the tuition you pay. Go pick up a cheap stock. Just buy a call. Let's say like AMD, for example. It's cheaper. When I say cheap, I mean it's cheaper dollar price, not that it's cheap stock. But you could just buy. Let's say if I'm bullish on AMD, it's $28.50 roughly. I could just go buy a $28.50 call. This is in April. This expires in 10 days. That tells you right here. I could just buy that call for about $100, and just go with it. Just sometimes just buy a cheap one and just see. That's how you're gonna learn. Is just do it. Of course, you want to time it when you want to buy it and so on. Like you don't just go buy them. But if you feel like you're bullish on something, pick a lower price stock and start with that way. And then don't be greedy. If you get 10%, 20%, take it, because you're not going to, don't try to get 100% and all that, because, you're not going to always get that. Just take that small profit, move on, and just keep doing it. That's the key. Just keep making small trades and just keep doing it. So that's the basics of option reading. And calls if you're bullish, puts if you're bearish. Call spreads if you want to reduce your risk. Same thing on the put side. And then selling is just the opposite. Okay?
Yeah,
Good on the basics?
Yeah, Saurabh here.
Sure.
So when people say generally, okay, earn premiums and that become your regular income, how you do that rather than being like earning a big money rather than getting a regular premium money from any of those stocks, and that's you you keep selling the puts. That's how you do it.
Okay, so let's talk about that. Let's look at Apple. So some people, that's a lot of options traders are just option sellers. They just will constantly, like you're saying, they just derive income from the premium. So let's look at Apple, for example. Now, I've kind of drawn in some support lines and so on, and maybe not valid anymore, some of these. Let me just do new ones. So, and then you just kind of will touch on technical analysis a little bit. So basically, when I'm doing the charts, I'm just using different lines, which we call, again, I'll just kind of, while I'm talking about it, I'll talk about technical analysis. That's what we call the process of looking at charts and then drawing lines and making assumptions and things like that. So the bottom line that we create is called the support line. That's where the stock tends to bounce, or where in theory, where buyers come in is usually down at the support line. And then on the top side, you have the resistance line, and that's where the sellers are coming in, to sell, or profit takers, and it comes back, bounces, comes back, bounces. So now notice on Apple, we're at the top of the channel line. So that's, probably going to be some profit taking. This thing could, certainly inch up a little higher. But for me, I was like, okay, today, we're at the resistance line. I don't want to be greedy, so I took a lot of stock off here and replaced it with options. So anyway, now we're talking about premium collection. So what people tend to do is
before you go to the
go to
that premium collection, could you tell me what was the process in drawing those lines? I think that's important before you make a bias in your options trading, right?
Yeah, so I use these technical points to give me either entry points or where I'm going to sell options. So I can look at any stock and I'll quickly kind of draw up some lines and just say, okay, well, this is where it's been bought up. This is where it's been sold. I'll just take anything. Let me just look at Twilio. Well, I'm going to clean it up. Okay, so let's just look at Twilio. And sometimes I do it on a weekly chart to even get a cleaner look. And how I'm driving those lines is I'm looking at like support levels, kind of where a lot of the supports are down here. This is a weekly chart, so they have more value. So sometimes, you'll get it like this. I look at the weekly and I put in those points at the lows. And it's a little bit of subjectivity here, but generally, these weekly points are much more important than daily points. And then when I switch it to daily, it automatically pretty much becomes a nice, it shows you the same pattern. And so basically, I just took the low points of certain weeks. Now here, it has broken the trend line, so that's why I didn't use that as a low point, because this was the channel here. Then now it's been broken, and we're under it. So these are the points, support and resistance, and it can be like channels, and it can be horizontal as well. Where you'll have sometimes channels can be going like this. For a while, it was like this, and then it was in this channel, and then it broke up higher, and then you get a new channel. So it's constantly changing. And it just takes some art and a little time to kind of get a hang of it. But then you look for when they start breaking these trend lines that, okay, now you examine okay, is there a trend change or will it work its way back in? If this thing works its way back in, it's bullish. And if it starts breaking, now these other lines I have here are called moving averages. So this is a 50-day moving averages. I got it here in blue, 50, then I have 100, 200, and then I also have 150. So 50-day moving average is just the average of the last 50 days, and it moves with each day. And this is in the day time frame. Then I have 100 and so on. And I like to see stacking. I like to see the 50 over the 100 over the 150 over the 200. The stacking is good. That tells you that the trend is still okay until it starts breaking. It's like when you get here where it's kind of hairy, that tells you that there's chop. That means it's not a trending. And that's a good time to sell premium, is when you get these moving averages kind of crisscrossing and things like that. Of course, you can do it here as well. But your method changes. So anyway, these are the moving averages. Now, these also are support lines. So right now, Twilio is finding support at its 50-day moving average. It's got that as support until it doesn't. But for now, it's still holding, so it's still fine. Uptrend is still intact. So this is the 50-day. We're going to be watching that to see if it penetrates. Any other questions on technical analysis? I'll go back to your question on the premium in a minute. But any other questions on technical analysis or anything like that? Moving average, everybody understands, hopefully.
Yeah, even for the technical analysis, right? So you say it's breaking that channel. So how long you will and it has to break for like for a day, for a two, so that you will determine, okay, it's a downtrend. For what should be that time range that you look for in the weekly? It's for 2 days. If it start going down, it's a downturn now rather than the bullish. How you define that?
Yeah, sure. I mean, again, there's no set rule. So I also will, when I want to see if this is a true break, I'll also look at the volume. So if you notice, like here, we've broken it, but like the volume is not, you don't have these red spikes. So that tells me that it's not necessarily a break just yet, unless when you see it breaking through with high red volume bar, then you have a potential for breakout. So one thing you look at is volume when they're breaking. And then, yeah, you got to give it a few days. And then if you start forming a weekly, under that trend line and it can't work its way back in, then you either have a pause of the uptrend. You don't necessarily have a break yet until you start getting a true break, and then you'll see volume spiking. So right now, this thing is still okay. It's still, the volume wasn't bad on the break. And I also look at these candlesticks. Like this is a bearish one right here, but then you kind of have these are called dojis. That's kind of like a pause, like, hold on, bears are trying to bring a lower, but then it closed back at the high. So tomorrow is key. Like I'm going to be trading this tomorrow over this high because I'm going to be looking for, if it breaks above it, then we might work our way back. At least I'll get a couple of points out of this. But so I'm going to have buy stop set over this high today. The high today was whatever that was. So let's see, where is the high? Okay, sorry. Okay, here we go right here. So the high was 122.40. So I may put a buy stop, and when I say buy stop, it means that my order will get filled if it breaks through that price. So if I look over here, I've got H over here. That's where you can see the high. So the high was 122.40. So I'm going to look for it to break over that. I might put a buy stop at 122.50 and then try to ride it up a little bit for a point or two or whatever I can get. Now, if tomorrow the market opens low and it never goes through that, my order doesn't get filled, nothing happens, I'm good. But again, tomorrow, we're going to know in a day or two if we have if this thing is broken the trend. If it breaks at 50, then you have a high chance. And if it breaks it on volume, you have a high chance. So that's kind of what you're looking at, is give it a few days. If the weekly goes under, if the volume goes higher. And then you also want to watch the candles. What are they doing? Like, what's tomorrow's candle going to be? Is it going to be a big red candle? Then that's obviously bearish. So one thing I would definitely suggest is learn some basic candle patterns, because they are so important. And they visualize so much better than just a bar chart. So that's a little bit on technical. And back to that question on premium selling. So my thought is, let's not look at this. Let's say back here, this thing was in this channel. Collecting premium was pretty simple. You basically were selling puts or put spreads under this level right here. Under 100, let's say. You could have been selling puts or put spreads under 100, and on the flip side, you could also have been selling calls up here. This is all no man's land right here. So this is premium that's available for the taking. So right now is a great time to be selling. If we get a little bounce, I would be selling calls up here, because it's got to work its way in, and it's kind of broken a little bit, so it's a little weaker. So don't be afraid to sell call spreads up here even. That's what I've started doing, is selling call spreads up here, but I've also started selling put spreads. I have been selling put spreads under here, but now I'm getting a little just watchful of what to do. So selling premium is like you would sell premium under support and above the resistance. And that's just like money that's there for the taking, that once you get a handle on it, And I would definitely suggest doing spreads and not just naked stuff, because you can get hurt if you if you sell a naked put, you get put the stock cheaper, but then sometimes you don't want it because it's already broken too low. If you buy a bad stock, you don't want to just sell a put like, oh, well, I'll buy it cheaper. Well, you may not want it then, so you got to be careful. So premium collection is selling puts, selling calls, collecting that premium, and then I always talk about theta just for the basic lesson. It's like every day theta is burning, and that's a beautiful thing when you're selling options. Theta is time decay, so it's right here on this column. Amazon, let's say this weekly's 18, whatever, let's just look at 1850, or kind of where it's at right now. The theta is like, right here, and it gets, it's like $1.60. It's burning just because of time decay, and that increases over as it gets closer to expiration. So theta is what I look at when I'm selling options. I want to make sure that I'm getting a nice high theta, and then sometimes I'll collect theta in positions and just let it add up. Did I answer your question on the premium kind of, or was it more to it?
Yeah, no, I got it.
Hey,
Okay.
Sandeep,
Okay.
can you quickly can you quickly go over how are you basics about on the charts on how to determine resistance, support, and a breakout?
Sure. Okay, let's see. If you guys want to give me any stock to look at, I can. Let's see. I'll just pick random. But if you guys have something to look at and just do fresh.
Can you look GWW?
GWW, right?
Yeah.
This one, right? Nice. Beautiful. Okay.
That's right.
So, all right. So let's look at it. Always you want to start bigger in. I'm going to look at 2 years weekly. So, you had a nice uptrend, and now you've kind of got a long-term sideways trend. Okay, cool. Now let's do some support and resistance. Oops. Price level here. So you kind of got a support. I look at where the most points are. There's 1, 2, 3 kind of are important points. So kind of here could be a support. And on the top side also, I look at this is 1, 2, kind of over here is where it hits a lot. So this is kind of like your resistance, and this is your longer term resistance here. Let's see, and then if we wanted to drive a little channel, we could, like that, or you kind of have a triangle forming a little bit.
Well, when you say a long-term resistance, there is no timeline on it, right?
Yeah. You just look back at where that over the course of the last few years, where was that? Where did it get rejected at? So this is a long-term resistance, 370. So if and that's where you want to look at for selling options on it, because that's it's going to be very difficult for it to pass that level because there's so many up here. You've got all these people who bought this stock who just want their money back. So once it goes up here, why does it work? Because all these people want their money back. They're going to be like, just break even, get me the hell out of here, and they're going to sell it, and that's going to bring it back down. So that's why it works, because stocks have memory, and then all these people want to get out, and then people from here, if it goes up there, who ride it up, are also going to be looking to take profits, because everybody's looking at the same thing. So that's why we look at that as long-term resistance. You just look back, what's the highest point or area of congestion, and then that's it. So now when we bring it back to a daily, I just switch from, I'm going to get rid of this one. So you can see this is a nice chart because you have a great bounce here, almost a kind of a double bottom. And this is definitely a bullish because it's at the top of the channel. You might get a little pullback here just because, people want to get their money out of who've been in here. But eventually this could be set up for a nice move into the next back in this range. Because I don't want to confuse you, but this right here, when you see these candles like this that are bearish, they are great when it works its way back in there. That's not a lot of resistance for it to get through. it's gonna pop through there pretty fast if it can work its way up, or if there's a catalyst. But right now, this one is a great one to be selling puts. All this right here, in theory, is like free money. Like you could be selling puts down here. This chart is more bullish than bearish. You've got all even under here, if you're a little more aggressive, 280 and below, you could sell put spreads. I wouldn't say naked puts, but put spreads under here. And then if you want more premium, you could be selling call spreads up here, and you'll get money for that too. And those when you do it on both sides.
Quick question on the drop that you just mentioned. When you say that those big red lines that you just struck, you'll just pass through like cake towards the upside just to fill in. What's the psychology there? Why would you think that would happen?
Because there wasn't a lot of, like when you have like this you had a lot of buyers come in here, and they got chopped up and beat up. Let me send this call right here. Okay, sorry. Okay, so a lot of people here bought, and they just want their money back. But here, people didn't really buy here. They were just collapsing with it, So there were not a lot of buyers here. So there's not those people who want their money back. That's just my theory, but, of course, there could be more to it. But it's like there's not a lot of buyers here. There were buyers here that want their money back. But here, nobody was buying. They were just like, get me out of here, and it started collapsing. So there's not a lot of these. This is called congestion areas, where you have a lot of up and down. But when you don't have congestion, it's really nice, because then it just kind of glides through it like butter. And then you also had shorts here that came in. But that's the other reason it works, because you had shorts that were like coming in hard, and once it gets to this level, they want to get out too, because now their trade is over. So they've got stops all through here, and once those stops, like all these people who are short the stock have got stops all through here. So once it breaks through that, we're going to hit all those stops. And how do they get stopped out? They have to buy. You have to buy a short position. So you get the buyers covering their shorts is another reason it goes up. So you have short covering, and you have not many buyers that were here. So all that kind of just causes it to melt up. Okay. All right. So, but Granger, yeah, it's a good stock. Obviously, any other question on Granger, or just good? Okay.
And so one thing, so in the study is right. So we have what I used to use the pivot points. So those pivot points create the resistance 1, support 1, and all that. So rather than creating the channels, have you tried using that? Is that a nice way to put it, at least for the beginners, rather than creating the channels our own?
Yeah, that's true. You could. Let's see if I can get one up. So he's talking about in like there's studies that are pivot points.
That's right.
So there's different. Let's see. So we can just add a study, and then there's let's see, all studies pivot points, and there's different. There's also like persons pivots. There's so many different ones, but we'll just stick with the basics. Add study, all studies, pivot point. Where is that? I just saw it. Add studies.
It's on the first P. Yeah, that one.
Okay, thank you. Okay, perfect. Okay, great. And I'm going to go to daily. We can see it. Well, I guess, like these, right? You look at it on the daily, I'm guessing, right?
Yeah.
Or you can do it intraday also, I guess. Let's just see. Let me just see how it looks on intraday. See, I guess it's easier to, maybe just because the stock is so. Let me do it like this. So these, so these are the pivot points. Let me see. I'm back on daily again.
So are the pivot points
exactly.
depicted with an arrow, or are they?
So these are the dots. So you have the center line, I think, and then you have P1, I think, right? And P2, is that right?
That's right.
Or R1, R2?
Yeah.
Yeah, I haven't used these in a while. R1, R2, and then in the bottom, is it S1, S2?
That's right, yeah.
Okay, so you have the center line. It's basically kind of a center point, and then you have these are the resistance points. So yeah, I mean, it's not a bad idea. Like you could be looking at these lower points, and you could even draw trend lines off of these, and create like, over here you could create a trend line, and okay, well this is areas of support, and you could sell premium down here. So yeah, it's a great idea actually. For if you're not good at, if you're not getting a handle on the charting or figuring out, it's just a secondary thing to look at. So now I look at these lower pivot points. This is a daily chart, and I could draw that line there. So now I've got a great support line, and then the top is maybe not as clean, but kind of, you could extrapolate a little bit. So you kind of have a channel that way too. And to be safe, go deeper under. That's just another good reference point for beginners, I guess, or anybody really. So again, these are studies called pivot points, and they use some kind of I forget the formula they use, but and then there's different ones. Different people have different ways, but you can just add pivot points to your chart and look at that as support and resistance point, which is a great idea actually. And you can do the same trend lines on those. Anybody else want to add anything on pivot points? Good. Okay. All right. So that's pivot points. So again, we're looking at support resistance to tell us where to sell options, when we want to sell them, or we don't always have to be about selling. We can also be about buying options, because this year I've actually done better buying options than I have as equal to selling options. So let's just say down here, if you were looking at GWW for a buy, when it comes back to support down here, if you're interested in long, it's just nice to buy a call or a call spread. Like let's just say it came back to 270 and you want to go long, you could buy a 270 call, or you could buy a 270 by 310 call spread and hope to get this again. And have down, limited risk. You're not going to lose than what you pay. So it's a great way to buy the stock, is like wait for it to get support levels and just buy a call or a call spread, and don't buy the stock, because that's a lot of capital. You can if you want, but your return on your investment is much better if you buy a call or a call spread. And the key is trade entry, like picking the right points. You don't want to be chasing things. You want to be patient and pick points where you want to get in. And if you have good trade entry, then your risk is much lower. You don't want to be just gambling and buying options. You want to just have the right trade entry, and don't go crazy. Some people feel like they have to buy 10 options or 15 or 20 or 5. You don't have to. You can buy 1 or 2 for starters to get the hang of it. A lot of times I'm doing singles and doubles, and that's good enough. And I'd rather be in 50 stocks than have, and then some of them are going to work out great, rather than putting all my money in one stock. So just don't go crazy. Okay. So, any other questions on support resistance, technical analysis, moving averages, anything in that arena? No? Okay. And then we can look at some charts and stocks of interest, if that's okay, unless anybody has anything else.
You keep talking about tater burners, right? Those trades.
Yeah.
Walk me through one example of how would you select a stock, at what points would you start putting those tater burners, and what makes you think that a tater burner would work out for that particular stock in that point?
Okay. So I'm just trying to think of one that kind of burns a lot. Like Baba was a good data burner for me, and of course you all know that I love my Tesla.
What's a theta burner, first of all?
Okay, yeah, let's talk about this. Okay, so what I try to do is I try to basically get a lot of theta added up in a position. So for example, this is at the end of the day, so it's not really active. But Tesla, for example, I take a lot of positions, and all I'm trying to do is have a neutral kind of a delta that's not too high, not too low. I'm trying to keep that neutral, but I want this theta to be high. So we can just kind of set one up and see. So again, a theta burner what I'm trying to do, okay, when I used to try to figure out, like, how do I capitalize on this data? Like this, when I was buying options, I would buy options and I was losing money. At first when you buy options, you're like, why am I losing money? The stock is at the same place. And then you realize that, oh, the time decay, because, every day an option is burning, and the closer to expiration, the more it's burning. So I was like, well, how do I capture this data, and how do you just seclude that data? How can I just get that to be the biggest number and try to keep delta very neutral? I want to keep delta close to neutral as possible. And it's not easy. It takes practice and effort, and you're going to get screwed a few times because things like Tesla will just have big moves and you're screwed. But those few times still don't outweigh the many times that it just kind of jerks around. And it's not just Tesla that I've done it on. I've done it on Baba when it was like here, all through here. So what I look at is I look at a chart and I see like where it's just stuck. Like, this Baba was just stuck here in this range around 180-ish. So I was like, okay, well, this thing is just stuck. It's not moving up. It's not moving down hard. So I want to capture the options and sell options, but I want to be neutral because if this thing shoots up, I don't want to lose a lot of money. If this thing shoots down, I don't want to lose a lot of money, but I do want to capture the time decay. So what you do is you basically just start, let's see, I don't have Baba in this account, so perfect. Okay, so let's just look at Baba. Okay, so let's look at the chart. Let's look at it step by step. Okay, so right now, basically this stock is kind of in a range. It's been a little bullish lately, but it's at the top of the range. So, it's kind of like somewhere in here is where it's a sweet spot. So I kind of look at the top of this, let's say 190, and 175 is the bottom. That's about 15 points, okay? So we have a 15-point range, correct? Everybody see that? Of course, this thing can break out, and it may on China news, but just generally speaking. So 15 points. So then I go look at the bottom, like, okay, 175, half of 15 is 750, right? So I add 750 to 175, and 182.50 is kind of my midpoint, okay? That's my sweet spot. So I kind of figure out my sweet spot where I want to sell a lot of options because it's going to go above it, it's going to go below it, it's going to go above it, it's going to go below it. So then I found my sweet spot right here. So there's so many stocks that are stuck in these channels. I'm sure you guys can think of other ones right now, but there's, so many. So what you want to find is that midpoint, and it doesn't have to be a sideways. It can be even a channel like this, but it's a little harder. Actually, no, I take that back. It's a lot easier when they're sideways. Although you could do it with upward channels too, but it takes more management. Here, I figured out my sweet spot, 182.50. Okay, so let's look at it. Okay, this is the analyzed chart. We're going to put Baba here. Okay. So what I'm going to do is add some trades. So let's go to April. So I would look at.
So why April? Why not other time frames? So what time frame are you looking at?
I usually will look at the next because I want to have the data burns the biggest about a week or two before expiry. So this is kind of like 10 days. So it's going to burn like this. I can do this 4-day one, but right now it's a lot of the juice is gone. So I usually will go out to the next week, so I have some time to play with it and to bang it up.
2 weeks time. Okay.
Yeah, kind of 2 weeks is kind of a sweet spot. I mean, I even do further out too, just because I'll have it every month. Like in Tesla, I've got them in every month for the next month or a month and a half. But anyway, so yeah, I kind of look at around 14 days, give or take. So this could be this, or you could do this. Let's just say 18 days. But let's just say this. Okay. So I look at my sweet spot. I want to sell some put spreads. I'm naked, but I'm not going to suggest that for new people. So I'm going to sell some verticals. So let's say sell verticals. So sell verticals. So I'm going to sell a 182 put and buy a 180. Okay. So basically I'm buying a put that's 182 and I'm buying a 180 to protect me. So let's just say I get about 60-cent credit for it, $60. Okay. So I do that. Okay. So now at this point, now this is called a risk profile where it tells you as it moves up in price, this is your profit line at expiration. And if you look down here at the left, this tells you your loss or profit. So if it goes up here, I would make $60 profit at expiration. If it goes down here, I would lose 190. So why would I lose 190? Is because the spread is $250. I took in 60, so that means I have $190 at risk after my premium collected. So this would be a one-sided trade where I'm betting it that it's going to go one direction. So, but for the theta burner, I might do 2, 3, 4, 5 of these. Let's just say 5. And then I want to get it on the other side, so I also will do the call spread. So I'll sell verticals. So I sell 5 of these, let's just say. Okay. So in this one, I sold although this is not we've gone way past that price now. I'm kind of looking back a little bit, unfortunately. Maybe I should do 185. But anyway, that's just for examples. I'll leave it. So basically, if I did this plus this, my risk profile looks like this. So now you can see this risk profile is great because this hump right here is your max profit. So what do you want this thing to do? Do you want it to move, or do you want it to move, or do you want it to stay? You want it to stay, right? So if it stays at this point, 182, right in the middle, this is your sweet spot. If it stays here, you have got, you make the maximum 1,000. If you look on the left, about $1,000. And if it goes down here, you'll lose. How much do you lose? $140. And you go this side, what? You lose $140. Not bad risk reward. If it stays here, I make $1,000. If it goes here, I lose 140. Here, I lose 140. So that's why I like these trades, because your sweet spot is really nice. And then every day, this is the theta. I'm surprised not more, but anyways, this theta number, should be higher. And the more expensive the stock is, the more that theta is. So this is the collection of your theta with this position. And I don't know why it's not more, but anyways. So, and maybe because I'm doing, I usually do wider spreads. That's why it's another reason. So I would do let me just look at something, 182, 77.5. I usually doing wider just so I can get more money. Wait, is that right? Wait, 82, 87.5.
At what point of time do you enter this theta burner? By that I mean, at what point in the stock movement are you going to place this theta burner? When is it at the middle portion of that range that you just showed, or is it at some extreme level of the support or resistance level? What point of time would you place it?
Good question. So what I'll do is I'll use it once it's in the middle. I'll start the initial on both sides. I'll sell a call spread and I'll sell a put spread when it's kind of in the middle. Okay? So then I play the game. Then I wait for it to go either up or down. If it starts going down, towards the support level, I'll actually become more aggressive in selling the put side because they're more juicy. You get more premium. A little riskier this way, but I want to sell them when they're worth the most. So when it goes down is when I already have initial position on, and then I add to that theta as it goes down, I'll sell more put spreads, kind of let's say right here, and then I wait and see, and then a lot of times you get the bounce, and then when it goes toward the other side, I'm selling call spreads. So I kind of just adding them up, and then I will just keep, and then the side that's working well, a lot of times I'll add to that side. If the puts are just collapsing really nicely and this thing is continuing to go up, then I just keep adding more puts because I'm like, well, I don't want to add more call spreads if this thing looks like it's going to break out. So this takes some management. If it starts going up here, you don't really want to be selling more call spreads because you're adding to your losers. So I just start, even though you don't get as much money, I start banging them on this side, and then a lot of times they'll turn around and I start going on this side. So it's like a game of cat and mouse. Just keep doing it, and as long as your wins are greater than your losses, you're good. As long as at the end of the day or end of the week, you've made money and it doesn't matter if you've lost on some of it. And it's not perfect. It takes time, effort, but it's a great strategy to kind of, once you understand all the basics and so on, how to add up the theta. So, for example, in this example, like I have 17 theta. If nothing else, $17 is coming, to me, and then it'll add up greater and greater. And then I'll add to whichever side I feel like is working. So that's kind of the gist of the theta burner. And then, you guys may have other ideas to make it better. We're open to that. And, play with it if you want to try it. Don't do it in real. Just play with it on paper or a paper money account and see. But it's great. Like, it's my bread and butter. Like, every day I have a theta burner on Amazon generally. I'll have it on Baba. I'll have it on Tesla. I'll have it on NVIDIA. I'll have it on, a lot of things just constantly in certain accounts. So I'll have, like, this is the one I have. So I just kind of keep it on a lot of stuff. And Netflix is another great one that just kind of, Netflix is kind of gets stuck too. Let me see if it comes up. Netflix is kind of just stuck here. It's stuck in this range. It's just kind of stuck around the 360 line. So I've been like selling calls and puts at 360 until it kind of can figure out what it wants to do. So Netflix is another great one. So basically, again, like I said, in summary, adding up a lot of positions.
Should the stock be at a minimum, like you wouldn't be doing a theta burner for a stock that's trading at $10, right? So what is the dollar amount that you would be looking for a stock to say, yeah, this is a good candidate for theta burner?
Yeah, ideally high price stocks, like I would say, nothing less than 100. You could do it less than 100, but I like the money to burn quick and come quick. So I prefer over 100. Like $200 and $300 ranges are great. Like, that's why I love the Netflix and Amazon and Teslas, because they're expensive stocks, and you get theta burns. A much you get a bigger theta number on it. Like let's see, it's 275 roughly. It's not showing that much right now, but it's usually higher in the day. But obviously Amazon would have a higher number. But anyway, so yeah, you want to go like, I would say over 150 even is better. 150, 200, 250, 300 are ideal, because they're volatile. That's what you get scared of the volatility, but that's what helps you, because it's going to jerk around. It's just going to, look at this mess of Tesla. What a mess. It's a beautiful mess. And then, Netflix lately has been that way too. Just a big, just stuck in this here, in this range. So this is a great theta burner on Netflix right now. And then I'm sure there's other ones you guys can think of. Amazon was a good theta burner. It's starting to trend a little higher. Let me see again. Yeah, Amazon, here, I had a great time with Amazon here. And then now it's trending. So now I'm selling more put spreads. And then I'm selling call spreads up here with the Amazon. So again, you want to just try to get more expensive stocks is better. But you can try with the cheap one and see, like, 30, 40, 50 bucks and see. I don't have the patience, and I like to just kind of do the higher ones to get it quick. Okay? Got a good idea of the theta burner, guys? And it's going to take experience and time. It's not something I would suggest doing right off. Get a good handle on options first. Okay? So technical analysis, options, any stocks anybody wants to look at? Any other questions?
Can you
look
at the market, SPX or something? Let's take a
I'm sorry, say again?
judgment. You want to take a look at any of the market index, and see how we are doing?
Sure. SPX and stuff, right? Okay. Yeah. That's what I wanted to kind of look at the market, because we are at highs and kind of like, it's interesting. Okay, so this is the S&P 500 index. Okay, I'm just doing the index. So, obviously this thing has had a run, from those lows. It's kind of like, nice uptrend. But, we actually, this I thought would be bigger resistance at 2,800, but it wasn't. It kind of bounced and came back above it. Now we're getting toward that long-term resistance. We're getting very close to it. So we still have a little more room before we get there. So we are up toward the highs, and it's again, this was that big drop that now it's able to come up through it pretty good. Like, it's coming right through this lack of resistance here. So now we still have, some room to the upside. As long as everything stays okay, we still have room to the upside. So I wouldn't start saying, get out. But again, of course, anything can happen. Tomorrow we could be down. Let's see, the futures are down right now. Dow futures are down 39. S&P about, ESs are about -3. So down a bit, but not much. So anyway, we have some more upside potential, but, I would be still cautious now. I would start a lot of people get conservative down here. I get more conservative up here. I'm starting to think, okay, well, it's time to kind of not be greedy, take profits, switch stock to options. That way, we can certainly blast through this. My fear is that we're going to, maybe get a China deal. It's going to pop up, and then we might get a sell-off. But for now, there's that hopium. There's that hope of, the deal's going to come. So it's going to just continue to maybe melt higher. So our resistance really is around here, around 29.40-ish or something like that. And we're at 28.95. So we still got a little more juice potentially. Anything is possible. So that's the S&P. Let's look at the small caps. So the S&P is still in an uptrend. It's still a buy, and scary as it is, until it's not. And then you got the Russell small. It's good to look at always the small caps, the Russell, the Nasdaq, because they're all very important, and that sometimes they're doing similar but different things. So now this has had a little harder time, but at the same time, if you have the ICC, you got a nice potential cup and handle that could resolve to the upside. This actually has room, a lot more room. So this actually, if we can break through the 1600, which could happen soon, this is actually bullish because this thing has formed its cup, it's formed a handle, so it's kind of it's shaken out a lot of the weak hands over here. A handle, this is called a handle, that will shake out a lot of weak hands because they just get impatient and get out. And then once it breaks through this, you actually have some nice potential here. So this thing is pretty bullish. It's not at the resistance, the highest resistance. So this has room, more than the S&P actually, potential. I mean, anything is possible, but the Russell looks pretty good. And then, so that's the Russell. And if you want to, anybody wants to add anything else, please do about these. Okay. It's SPX, and I'm going to do the NASDAQ. The NASDAQ is also another one that's kind of gotten maybe kind of ahead. This one seems the most, this one is the closest to resistance.
So what is that oval you drew? What does that mean? The oval you drew?
So I just do that to kind of show that it's a big, studying these are called bases. So this is like a big base that is formed here. So I just do that to notate either a base, just for my visualizing it, a base, or if you follow this stuff like cups, this is a big cup. So NDX, this is a big base that has formed. I mean, it's had a big run up. It had a run down. So now this one is a little bit potential of a pullback because of the fact that we're at previous resistance here. Again, anything is possible. We can shoot through it, but this one might be a little more cautious on. Now we could certainly go up here and form another handle, here, and then we can shoot higher, which is possible. But here I would definitely take some profits if you're playing indexes, and maybe look to. I'm starting to sell call spreads for December already, just because I'm like, I get good premium while we're at the highs. I would expect a pullback between now and December. So what I'm doing is I'm selling, like, for example, QQs at 185. I've started selling like 205, 200 calls up here. Like, you can get $300 for that, 460. Of course, we could certainly go to let me get QQQ charts. QQQ is a NASDAQ 100 ETF. So this is the same thing as the NASDAQ, more or less. So you see, we're here. We're at the top, resistance. We could certainly go up higher, but the odds of us just shooting through 200 are not that great either. Between now and December, my thought is that. Hello?
Oh, nothing. It was just, yeah. You're good.
Okay, sorry. Okay, so anyway, so I mean, I'm not suggesting this, but what I'm doing is I'm selling calls up here, or call spread. You don't have to do calls, because this between now and December, my thought is we're going to get some pullback at some point. So then I'm going to capture that money during those ugly days, and why not sell them when they're juicy and you're getting money for them when it's high? You don't want to be selling calls when it's low. You want to be selling calls when they're pricey, and you want to be buying them when they're cheap. So that's what my thought is, that NDX or NASDAQ or QQQ is a little bit choppy. We can certainly go through it, and it's going to also depend on earnings. You've got Apple, you've got Amazon, all those are going to have a big role, and that might cause it to go up. Apple and all those guys. So let me just go back to the NDX again. So that was the NASDAQ. NDX. And again, this is my opinion. I'm not, who knows? I don't know what tomorrow holds. Like, anything is possible. So NASDAQ, we're closer to the top. S&P, we were closer to the top. IWM was the one that actually looks more interesting because it has more upside potential if the market keeps going. And you can also trade the IWM, which is that.
What about SPY?
So that has, or SPY for the S&P. That's the one I'm a little bit, I don't know. We can shoot up, but I'm just a little cautious around 290. I think we could resist. There's going to be profit taking. This one is the one I've taken my money out and I've just replaced it with some call spread, and I'm selling calls up here like over 300 for December. Just because I'm like, you know what, it's gone up so much. It's going to take time. It might not play out right. It might not play out for a month or two, but I know we're going to get a pullback at some point. So I'm just kind of setting up for that. So any other index anybody wants to look at? Those are the main ones. Okay. So, okay. Any other questions right off? Anything? Okay.
Anybody want to talk about scanners?
You want to talk? I don't. Yeah, scanners are like, this is the one you use, right, Manish? On this?
Yeah. I mean, I don't.
Okay.
I haven't mastered it, but just I was just wondering if anybody wants to talk about it. I don't think I'm in a position to give lessons yet.
No, you are actually. No, I mean, because I have scanners set up on a different platform, but on Thinkorswim I haven't used it, but basically, scanners are basically where you're putting in your parameters of whether it's volume or certain stocks or a certain price, right? And different things, and you just are looking for certain things. So anybody want to share if you guys were okay, what's working for you? Because that's the whole point here, is I want to collaborate, and, we got things that are working for different people. Let's put it together and create a system or an approach that's working. Let's help each other. So if anybody has things that are working, please share.
Has anybody done scanners that can, provide results like pre-market, post-market? I know there's already built-in scanners on TOS. Has anybody else done on their own to set up pre-market scanners?
Scanners for what? Day trading or swing trading or long-term trading?
I mean, it could be for anything. I mean, it could be days, swing, long. It's just just the art of setting up the scanner, so that way people can learn how to look up. I mean, during the trading hours, those are pretty self-explanatory based on your thing. But like pre-market, there's a lot of movement going on way early. So has anybody done any research on setting up scanners?
Anything that works for you, Mike?
With to scan stocks, not for day trading though. It's for searching long-term trade good stocks or swing trade stocks like that.
Right.
Not,
so are they like during the trade?
Not for day trading, which looking at pre-market or I used to do that, but it didn't work for me, so I quit day trading.
Okay. So on the scanner on Thinkorswim, Manish, does it show you pre-market? Does it work pre-market?
Yeah, if you go under scanners, if you go under scan tab, or underneath that, this says scan in all option table. Go up a little bit.
Setup scan? No.
To the right. To the right. No, where you were to the right. It says all option table.
Okay.
Yeah. And then go down to loser top 10, I think.
Okay. Okay, nice.
Top 10, or is it under lovers and losers? One of these has post-market and pre-market movers. Nice. There you go.
Oh, that's nice. So, okay, cool. So I'm just gonna, I don't know if anything will show up here. I guess you have to put your parameters in. But anyway, that's good. So for those of you who have Thinkorswim, this is good. So you can look at the pre-market movers, post-market movers, right? And then also I just realized that the option, the volatility was there too. Top 10 volatility increase. That's nice.
Yeah, and if you go to Market Watch tab, up top here you can pick the pre-market here also. Where was it? It was under.
Oh, you just click here maybe.
Yeah,
and you just
there
put it here, right?
Under pre-market, and here it'll show you what post-market, and then I just sort by volume.
Okay, you sort by volume. Okay, cool, nice.
Or whatever sort you want to do.
Yeah, whatever you want to do.
I ignore I ignore the NAs. So
nice.
This gives me an indicator
of
what's moving.
Nice. So post-market, pre-market, you can sort by volume or whatever you want. Everything. That's nice.
And there's a little, on the right side, you see the little tiny gear next to the 52-week low. Yeah, you can take that, customize it, and then you can remove half the columns if you don't want it.
Did you ever find a volume, like a tracking volume or anything like that? So that's what I was interested in.
If you type in VOL up top, look up a column up top.
Okay.
It gives you all the different types of volumes you can add on.
Okay, nice. Okay.
And then
so
you can
remove
volume from the right side.
Okay.
Yeah, that tells you, that'll give you, the rate of change will probably give you volatility, how quickly it's moving.
Volume. Yeah. So that's what I want to see.
And you can drag, and if you want to move the columns, it's better to go back into the customization mode and move it up.
Yeah, exactly. Yeah. So that's nice. So the volume rate of change would be important because that's what you want to see is the greatest difference in volume than previous.
Right.
That's a good one. Versus volume is good too by itself, but then the rate of change is one I kind of got to watch too. That's good. Okay, good. That's good that we had this discussion because I've not been using this. Because I'm just so used to trading the same stocks every day, but it's nice to find things that are moving. So good. So you have pre-market. Okay, good. Downgrades, upgrades. Okay, cool.
Yeah, and one more thing as well, right? So even if you search it on the web, you can find few strategies like the scanner you're talking about, and that you can import. They will give you all the details, like how they design it, pre-market, what is the volume, how much 10% went up in the pre-market. So you can bring all that import into your scanner and can use it very well.
Has left the meeting.
Nice. I can send it links for that. Yeah.
Okay. Yeah. No. Please. Yeah. So it's for ThinkScript for Thinkorswim or.
Yeah, I use E-Trade most of the time,
Okay.
but yeah, I think for toss as well, there are a few.
Okay. Now, yeah, please share because yeah, we want to find the ones that seem to work because we want to find the right stocks that we can that are moving on volume, etc. That we have because sometimes you'll get that one or two that you can just milk in the daytime and just make up for like weeks of work.
Right.
Like that, yeah, like a few that we've had. Okay, good. So scanners, good. Anything else on scanners?
Oh, no. When I use
Okay.
Predator, I try to look for stocks that is reaching a 20-day high and gaps up at least 1 or 2% and has a high pre-market volume. Those tend to go up. So.
Okay, nice.
So
20-day.
Yeah, if there is a way that you can search, put a criteria like which is stock that is hitting 20-day high, gaps up, and
Okay.
gaps up pre-market with volume in pre-market. Those stocks, and then look at the pre-market highs and lows, and you can set the target, stop loss, and profit taking. You can do that too.
Nice.
And there's also
yeah.
I have folks who are using TOS. They're under the education tab. There are a lot of free courses that goes on during the day, especially every day 11 o'clock, that you can go in. So if you go to education tab, and if you there's a whole bunch of information that you want to. Yeah, there's a learning center. You can type it in what you're looking for. There are courses, and if you and then you can type it in, and if there's anything going on, you can actually register right here, and it'll pop up and remind you that if you want to join. I don't know, like every day at 11 o'clock there is a session, trading option session or something like that. But you can sign up here.
Okay.
And most of these are free.
Nice.
And then also recordings too, so you can actually watch. And then I think under messages, a support chat up top where you have your cursor now.
Yeah, support chat they have. Yeah, that's what I was
They have live rooms. They have like live rooms.
Seminars. Yeah, there's live rooms, chat rooms, and there's also a lot of seminars that are nice that I used to watch, like some of the older ones.
So there's a seminar at 11 o'clock every day that this guy starts. And I only done once, but these are good to watch if anybody has time.
Yeah. Yep. And then I usually keep this Benziga Squawk on as a chat room audio because they're constantly putting out like what's happening, it's free, and they're constantly putting out like, hey, so and so buying this or selling this or call sweep in this. So I always have this on. Just FYI, it's a good one.
So call sweep is basically what, somebody just buying a huge volume of calls.
Yep. Exactly. Like, yeah. And sometimes you'll hear them say above the ask, which is more bullish, or so on. So yeah, if you see like so-and-so above the ask, that means they're aggressively buying, So yeah, that's why I listen to this, and I had this trade flash on the left is always on too, because there's always stuff on that all day. And, because I can't, that's the best way for me to know what's going on, and I can quickly jump onto something or look at something and know what's going on. Through the day. So yeah, there's so many things, but of course it's a lot of things to look at. But if you are trading actively, this is great. They've got everything on here.
Yeah.
So cool, awesome. Anything? I think is anything else, guys? Or okay. And if no stocks that we want to look at or anything, right? No, and anybody has anything in mind, something to look at that we should keep an eye on, or something that's
look at NXPI.
Okay, what's that? Sorry.
NX.
What was that?
PI. And Nancy X-ray Papa India.
Okay. Nice. Okay, yeah. So it's formed a big double bottom.
Right.
Yeah, so nice. It's obviously the same kind of like where you've got this big base here, second base formed here, a handle kind of sorts, and it's kind of it's it's kind of inching higher. So this is a bullish one, obviously, where you're kind of breaking through the upside. So yeah, this
Right.
is, more bullish, and you've got you've got potential of up to here 115. So it's got a nice, it's got resistance along the way, but you've got a nice. You're not at all-time highs. Yeah, it looks good. This is a good one. Actually, we should.
Yeah, there was a good entry point too, like a couple of days ago, below 100, below 90.
Okay. Wow. Yeah. So, and then it's optionable, right? I'm sure it is. So it's you could sell
But this
puts
might not
on the
be a
next.
good one to trade for options.
Why?
I think it's probably not a bad one to trade options.
Yeah, I mean, or sell puts when if it drops again. Like if it drops
Right.
here again somehow, some way, then under 85 you've got good support. You could sell puts down here. Yeah. So yeah, good bullish, more bullish than bearish. If you have it, great. If you don't have it, it's a good buy on a pullback. And or you might get a breakout. Volume wasn't so great today, but we're going to see if it, if you get a little more volume coming in, then it could be a breakout as well.
Yeah.
Okay. Anything else? Let's see what else.
Okay.
Like a lot of the
Can
good
you take
stocks are like extended. Go ahead.
One stock, XL, EXEL.
Okay, nice. Nice. Okay. Yeah, same. It's very similar. Like so many charts have this pattern now. Same big base here, another kind of small base here. We're at the top. We're at resistance. Then you've got this area here where it can chop through pretty quick if it can continue to go higher. Earnings are 4:30, so you got a couple weeks. Yeah, I mean another one that's definitely more bullish than bearish. And if we can get above this 25, then it's got smooth sailing to about 29 because there's not a lot of resistance here. I always look for these big dark red drops, and those are nice what's called gap fills where it can fill back up. So it needs to break above 20. You've got a kind of a double top here. You've got some resistance here. It's got to break through. But again, it's more bullish than bearish. And I don't know anything about it fundamentally, but if it's got good fundamentals or not. But if it does, it's a good one if you have it. Yeah, more bullish.
Thank you.
And yeah, sure. Anything else, guys? So what else? Yeah, a lot of the good ones that I'm like itching to get in are just not pulling back. Like Xilinx is a great one that won't pull back. TTD, somebody mentioned the other day, again, this formed a nice hammer today. I was looking at it. So I want to see tomorrow a buy over the high.
Okay, TTD is a good one to get in, but it's kind of high now.
Yeah. It is high, but at the same time, it has potential to go at least.
I took a position today.
Did you?
I took a position today, yeah, at 190 plus something. Because I felt like it's been going sideways, and it's right at the breakout day levels, right? And it's right. I feel like it's been holding. I mean, I had a stop loss around 180-ish. I don't quite remember. I have to look at it. But 180, 181, I have a stop loss. So I feel like if I'm there, it's still go. It touched 180 twice, and I'm hoping that the third bounce is going to be a breakout bounce, meaning it touches there one more time, and the way it goes up, it'll probably break out at that point in time. And at that point in time, I feel like there's earnings coming in as well. So it's all coming in together. And I felt like maybe it's a logical position. Maybe I'll add more later on if it drops closer to 180. But then it's not breaking that level. If it's not breaking that level on the way up, I'll probably add more. That's my take on that one.
Yeah, I mean,
but
fundamentally, it's a great company.
Yeah. No, the reason why I took it is it was fundamental.
Yeah, I'm more impressed about what the company does and how its revenue stream is coming from, and they're in the right space as far as market share goes. So It's just up and up
And
for them. I mean, this is like a
I
$300
did
stock
say
for
that
sure.
they're getting into China as well. The reason why you see that huge pullback, the big reds in right in between, is because they had some conflict with Google about how their advertising strategy. Right now, everyone is talking about privacy after the Facebook fiasco. So that's where they sell ads. That's all. There's just an ad selling platform is what Trade Desk is all about. So Google is saying maybe we will not have any more partnership, but they're trying to change their policy around privacy, and that could potentially impact TDD, and that's why there was a pullback there, and that caught my eye. And then after that news, it didn't pull back much more, and I thought, okay, wow, that news didn't drop it below 180, so I think that's a very good support level, and that's where my whole thesis got into play.
Yeah. I mean, the good thing about the company is they're not dependent on one specific. It's just anything streaming. So they have like unlimited resources to sit there and get the revenue stream from.
Yeah, and they haven't entered China. They're entering into China. So it's a very good catalyst right there.
Okay.
Yeah, I mean,
Twilio,
I didn't pay attention on the pullback. I was busy, so.
No, the fundamental story is really great.
Okay.
So Twilio is another one that I looked up.
Mm-hmm. Yeah.
And I put in a limit order right now around, I think 119-ish, 119.50 or something. I put a limit. I didn't get filled today, so I'm hoping that the 50-day moving average, it's finding support. So it tried to hit it twice already, third time. Same thing, right? 3 times. Third time's a charm kind of thing. So if it hit twice, I think there's some support. If it pulls back to that 50-day moving average, I'm adding.
Okay.
I'm buying a new position. Twilio,
to the 50. Yeah, 50 is a good support level. I mean, I hope it doesn't go back down there. I hope it continues to go higher for your sake. If you
you're looking at TTD, but I was talking about Twilio.
Oh, sorry, what are you talking about? Oh, yeah, Twilio, yeah.
Twilio.
Yeah, that one is that one is the one that we're going to be watching. Yeah, sorry. But that one, I'm going to day trade that again every day. It's been like a nice day trade, but I'm going to go over the high tomorrow morning. But yeah, absolutely, the 50 is still, still support until proven otherwise. It's still, we'll watch it closely now, but earnings are, again, we still have a month. Okay, good. So I think this looks good.
Let's put what I have thought about Twilio before we started this session and what I see the way you drew the lines. So from your analysis, it's broken the downtrend. Even though it has broken the downtrend, it's still finding support at 50-day moving average, which is a lot of people, a lot of institutions look at 50-day moving average, right? So now, do you see that it's still going to go sideways because it's going to keep hitting at the bottom level of the channel, or is it going to break it? What's your analysis on that one?
I mean, to be honest, I don't know. Time is going to tell because, we don't know what it's going to do because it could easily gap under it for some reason. We could get a downgrade. It's hard to say. But for now, the line in the sand is that 50-day moving average. We're watching that to see if it can hold that continually or can it break back above this. That's bullish, obviously. We just don't want it to collapse under that because it's broken this one trend line, which is one caution sign. And the second caution sign would be the 50. But it's not like high volume drop or anything either. So this was, but not so much today. And it wasn't a drop. It was just kind of like staying in place. Hardly did anything. I still think that this has potential to go higher before earnings, just because there'll be, the belief that this thing is going to go higher, so people will buy it. But I would not hold it through earnings. I plan to play it long before earnings. Just because I don't like to hold stuff through earnings. That's just me.
But most of the moves happen on right after earnings. Like the TTD, I was in that particular trade. I probably said this in the chat. I was in that trade until the day before earnings. When the day before earnings, it dropped. Like, do you see that red handle right there? I was one of those who got shaken out. And then immediately just went up, and I never got a chance. And my retake was like, okay, it's finding a base right now. Let it come in. But like I was there until then, and then I got shaken out. So how, like, most of the move, I mean, we are coming out of a correction though, so that move, it's justifiable to buy a good fundamental story given a correction. But I feel like most of the move, like that move from 150 to 202, I think it was around there. Yeah, so that move occurred after earnings, and then after that, nothing. I feel like there's usually nothing occurs after earnings, and right after. I mean, after earnings, the major move happens and it stays there. Most of the stocks do that. I'm not sure. So how would you make money if in that case, if you want to go long on a stock that just finished earnings, and you're saying you want to do that most of your trading right before earnings? Like, what is the strategy there? Like, I don't see any moves. Given this example,
that's when. That's why you employ. That's when you employ options. You know, because I don't, before earnings, you know, there's a lot of downside risk. So then you basically don't get your stock. If you have stock, I always believe in getting your stock out, but stay involved if you want to be with a call spread or a call. You know, of course, you're still risking. It's expensive. Calls are expensive. But at the same time, you're still involved and you've got a lot of upside if you're right. So then in that case, I would say, like this is a good one if you're bullish to hold it through earnings, but I would prefer to do it with a call spread or just a call or calls, because then at least you don't have the downside risk of if this thing collapses down, which can happen, of course, you know. You know, so like last time in Amazon that happened, you know, like before earnings, it was bullish, and then all of a sudden it just, you know, dropped hard. Like here, Amazon was like bullish, and then here you were like, well, should I hold through or not? And then, you know, if you did, you lost money. But at the same time, you could have stayed involved if you really wanted to be with just some options. But yeah, I mean, it's hard to say because earnings can go either way. But if you want to be involved, just buy some options or call spreads or something. Or I usually do what's called risk reversals, where I sell puts to buy calls, and then that way I'm like somebody else is helping me pay for it and reducing my. I do have risk on, but at least somebody helps me pay for it. So, but yeah, I mean, good stocks. I think, this thing, if you guys, I mean, if fundamentally sounds good too, so it has potential. If nothing else, I think it's going to be a rise into earnings. And a lot of times I'll if something is dropping before earnings, I'm actually more bullish on it than if it rides up into earnings. Then I get more scared. Like something is like, of course, this is an example where it didn't happen that way, but, you know, something, well, actually, no, this went down before earnings, then it popped.
Yeah, it did. I mean,
So
you would have been in the stock when I got scared out, but okay. I understand the psychology, Yeah,
so Amazon, like here, when it was closing at the highs, I was going to hold it long, but I didn't. I was like, no, we're riding long into earnings. Same thing happened in Apple last time. It went high into earnings, and then I think it fell, if I'm not mistaken. So, well, maybe it did, right? Anyways. Certain things that will do the opposite, but I'd rather them go bearish into earnings, then I'll buy a call because it's cheaper, number one, and number two, you've got shorts they're going to have to cover if they're wrong. Okay? Yeah, there's a lot of psychology involved, but, you know, it's guesswork and psychology both. Anything else? Salesforce is another good one, but it's kind of it's got a big cup and a handle too. This is a good one too. Okay, so anything else, guys?
How about Roku?
Yeah, that's been junk lately. Let's see. Okay, let me get rid of all these drawings. Okay, so we've got a big cup. It's in a handle right now. It was bullish until I don't know what happened. Like the last few days, it just kind of like fell out of bed. So you know, it's now. This was a handle that it now kind of worked its way back in today. So this could be a good buy over today's high for a trade, because you're going to get some shorts that are going to cover that probably have stops above this high. this is called a gap here. So it's got a gap that it could fill. So I probably will take this for a day trade tomorrow. So you've got a high volume drop, which was not good, but at the same time, today was a nice recovery. It worked its way back in. And so it's kind of like found some support at the 50. Even though it went below it, it still closed back above the 50. So it's still bullish. It's not outright bearish yet. And it could be a good trade tomorrow, actually, now that you reminded me, for just a quick pop through that, get that gap from 60. So I'm going to take a high over 61.25 and try to just fill that gap for about a point or something like that. But that's just a day trade. But for if you have a position, I would hold it. If you don't have a position, maybe this could be a long here. Let's see how it does tomorrow. But it still looks fine. It's still in the handle. It worked its way back in.
It has awesome premiums though.
Yeah, that's good. So I would be selling puts. You could sell puts that expire before earnings, like 55. You could do, well, it's not that much money. I mean, it's 62 cents, not much for now. But, if it goes down lower. But you could sell put spreads like 60 by 55. 60 by 55. And get about $1.50, $150, $3.50 risk to be bullish on it. So what I would do is what I always like to do is I would sell this right here. So I get $150, let's say, and then I'm going to turn around and buy a 60 by 62. Let me see how much that is. It's perfect. So what I'm going to do is, if I wanted to get bullish on this, I'm going to sell that put spread down here, get $150. Then I'm going to buy a call spread above it for this price. So I make money if it goes up, and if it doesn't, I still am credit. I still get a credit for the difference. So this is called a risk reversal. I always love these because I like to let somebody else help me pay for my calls or whatever I want to buy. I want somebody else to help me, so I will sell a put to buy a call or a spread. So that's one way to do it.
Interesting.
You understand that method?
Yep.
Okay, cool. But yeah, it looks fine. If you have it already, just hold it. But I mean, let's see how it acts tomorrow. We don't want it to take out this low. 57.50 is the line in the sand here. We don't want it to take that out. But for now, it ended nicely today, which is good. Cool.
Okay. Thank you.
All right. Good, guys. Everybody good?
Yeah, I think we've gone 8 minutes ago. We'll call it a night.
So we'll wrap it up now, and then we'll try to do this again. I just want to try to get everybody caught up. I want to get, see where everybody's standing. And, if you have any questions, just put them in the chat. If you want anything charted, send it over. Let's just keep learning, let's kind of get a good grasp on options and then technical analysis and all these things, because if you put it together and if we put our minds together, it's very powerful, because there's things that are working for different people I've talked to separately that we need to really get together and kind of share what's working for you or not working for you. If something is losing 100% of the time, please share that because that's a perfect trade. So
yeah, agree. Yeah, sharing.
Right? Yeah. So tell us what you're losing on constantly, because that's how I learned about Tesla. Because I was losing my shirt on that thing, and I was like, why? I was doing the opposite. Then I flipped that around, and that became my best performer, every year for the last year at least. So yeah, so keep sharing, guys. All right.
All right. Thanks, guys.
All right.
Good night,
Thanks.
everybody. Thank you, Manish.
Have a good
Thank you,
night.
everybody.
Thank you.
All right. No problem.
Thanks, guys. Thanks, Manish.
Good night.
Take care. Good night. See you guys.
Has left the
Okay, good night.
meeting. Has left the meeting.